Hello, Cleveland, and welcome to your roughly 10-minute TA for the day. It is Saturday, May 24th, 2025. I am happy to be alive, and I hope you are too. Hope your weekend's going great. Hey, before we get started, please give me a like, give me a subscribe. That really helps out the channel. And as a thank you, I promise that any comments that come in, I will respond to each and all of them. So, without further ado, I give you the TA. So, today I wanted to look at this chart that I made last Thursday. Everything in blue last September. Everything in blue was last September, along with the vertical lines. And then these kind of greenish aqua arrows are new, and I'll get to those later. So, I'll explain what these are. The green lines are the peaks, all-time highs. Red lines are the bottoms. Yellow lines are halvings. So with this chart, what we can see is that Bitcoin's been moving up and to the right, been doing pretty well, but the growth has been slowing down. Now we can see what between the second all-time high from the bottom to that second all-time high was a 56,000% increase, and it took 745 days. It was only 370 days between the halving and that next all-time high, and it was an increase of 10,000%. Now, the following bottom and then halving and then high goes 853 days between bottom and the next all-time high, 96,000% increase, or I'm sorry, 9,600% increase, and 526 days between the halving and the all-time high, and it was a 2,900% increase. And then from here to our all-time high in 2021, it was 1,060 days from this bottom to that top for a gain of 1,900%, and then 546 days between the halving and the high with a gain of 704%. Now, what do these numbers tell me? Well, when we put them into this equation, let me explain what this equation does. So you would take a ratio between these two and the ratio between these two, the increases, the how much it's gone up. So we'll do 704 divided by 2908. And that gives us the difference, like how much it changed. What was the change between this and this? So the ratio between this gain here and the ratio between this gain here. And that gives us the difference between this gain and this gain. Like how much did it change? And then we did the same thing here. And now we have the two numbers, these two ratios. And these two ratios, there and right there, when you get a ratio between those ratios, we can get the change or the difference between the differences, if that makes sense. Then if we take that difference between the differences and we apply it to this ratio, then we can say that the next ratio should be, different by such an amount. And then if we take that amount and that'll give us the next ratio that should be. And then if we take that and we multiply it by the last increase, 704, we get a proposed gain of 141% from the halving, which happened here in April 2024, to the next all-time high. So we do 2.41 times 63.5K. That's where it was at halving, and we get 153,000. Now, we do the same thing for the bottoms. We get 434% gain from the bottom to the next all-time high. So we do 5.34 times 15.8. That was the last bottom. We get 84K. And that gives us this green box here, which is like where our all-time high is likely to be. Now, what are these arrows? Well, okay, first off, so you would see that we are not close to date the date range that we should be in for this all-time high. Oh, I forgot to explain the date. So with the dates, I did the exact same math, except just with the dates, and I basically got this range. You can get 550 days from the bottom to about 1,400 days from the bottom. So that gives us this range here, which is from about October of 2025 to about October of 2026. And yeah, we haven't gotten there yet. We've gotten there price-wise to this range, but we haven't gotten to the date range yet. Now, getting to my other point, this new stuff that I've added. So you'll notice that before each halving, in the past, each halving has preceded price action breaking the previous all-time high. So the halving here was 13 bars before, 91 days. Here was 238 days, 34 weeks. Here was 29 bars, 203 days. So on average, it's about 25-ish days. So here, though, we reached our all-time high. We broke our all-time high 6 weeks before the halving. So does this set our entire cycle back a little bit? Does it push everything over to the left? I think it may. Now, what would that do? Well, I would say that would mean that we're pushed back about 31 bars. About, 25 is the average for where after the halving price action breaks all-time high. Minus 6, so that would be a total of 31 bars back from where it should have been breaking all-time high. It broke it back here in March of 2024. So if we pull back our date range by 31 bars, we'll get, there we go. We'll get roughly right around there. And you'll see that we are now actually in this green square. And so maybe this is our all-time high. I'm not saying it is, but it could be. It also kind of looks like that like a double top. Could be. If we don't pop off and go higher, it's going to put in this double top and we're heading down. Maybe down here to 67, but this could go as low as 53, 54-ish. Just like, this move down. It won't be, super fast. I mean, it could take a few weeks to jump down there and then a few more weeks to get down there, just as fast as it took to get up here. But yeah, it's possible. This could be the all-time high. Although, I don't know. I think we could get up to 150 still. I think we still can. There's still a shot. Why? Well, let's talk about our regular charts, our everyday charts that we always look at. Let's start here on the daily, and I'll tell you why I think there's still a chance. Well, because we're in a bullish positioning here on the daily, okay? We're looking for this bull flag to complete up to 115. If that happens, if we can get up to 115, that would put in that higher high. That would really invalidate this double top somewhat. I mean, it could be a wonky double top where it gets a little bit higher on the right, but for the most part, seeing a higher high would be good. We'd be happy about that. So yeah, back here, we're still over the 200. The 21's moving up close. We've gotten into overbought territory here on the Stokes. That's pretty good. That means we may just see this turn around and price action may keep going. This might have been the pullback right there. What was it? 112 to 106, so 6,000 pullback. That's roughly 6%. A 6% pullback seems to be on trend for this run up. But we're used to these bigger pullbacks. These 20, 30% pullbacks happening. So we'll see if we'll see another one of those, or if we'll keep busting up. The Stokes being way down here is a good thing. it's a good thing because they'll turn around and they'll start pushing up, and then the RSI can start pushing up. It's already starting to curl towards the upside. The signal line here on the RSI finding its way out of overbought territory. That's also a good thing. So yeah, the daily's looking bullish. Daily's looking bullish. And the BBWP, volatility's pretty high. Bollinger Bands are coming in tight. So yeah, hey, if we do go down, I think 99.6 might be as low. Maybe 94, back down to that 200 to bounce off it. But if we get down that low, then it's like, oh man, maybe we're forming a head and shoulders, whatever. Hopefully we stay above there. We don't get that low, hopefully. Anyway, let's look at the 6-hour chart. So the 6-hour, we were looking at it yesterday right around here, and I was saying, hey, if it does pop up, it may, and then may form a shoulder here, and then our breakdown from the shoulder would bring us down to about 102, which would kind of bring us down to create a head and shoulders like I was just talking about on the daily, but this would be on the 6-hour chart. If that happened, well, then that would be a bigger play down. Let's take the measured move for it. It would be down to about yay, and then that would be about down to yay, down past 94. Look at that. Hopefully it doesn't get to there, but it may. It just may. Though, again, Stokes are overbought here, or I'm sorry, oversold here as well, and the RSI is finding strong support from the median line here and remaining in bullish territory, although under its signal line. But this could be a double bottom. Could bring it right back up to that 112 to our all-time high. I should put a horizontal line there. There you go, right around 112. I don't think we made it to 112. It was 111.957. 111.957. All right. So yeah, it could bring us back up to retest that all-time high again. And then we'll see what happens after that. If we break through it, we're heading to 115. That's our next stop. If we're heading down, 102 is our next stop. 99.6 after that, and then 94 back to our 200 here, hopefully staying in over it. Let's take a look at the 90-minute chart, see where it's at. Also overbought stochastics. Things are looking like it may turn around here, like there may be a bounce from here. The RSI is in bearish territory though, under its signal line, but we are seeing higher lows here along with here. That's confluence, bullish confluence. The Stokes are turning to the upside. We're still over the 200 here as well. This could be a turn. This could be a point where we're seeing a turnaround. This could be a point where we're seeing a turnaround. Could bounce from here. If we do see the bounce from here, we're going back to all-time highs. If we do not, well then you know where we're going. I already told you. Let's take a quick peek at the 22-minute just to see where that's kind of driving the 90-minute. Well, look at that. Overbought on the Stokes here on the 22. The RSI is getting stuck or finding a little resistance here at the median line. Still trying to stay in bearish territory under the 200. Oh man. Yeah. And here's this head and shoulders that we were looking at there on the higher, is that the same one that's on the 90? Yeah, it is. So yeah, this one looks bearish. The 22 looks bearish. What about the 5? 5 also looks bearish. Overbought Stokes pushing to the downside under the 200. Only thing going here is the RSI is in bullish territory, but that could turn around quick. This could push back down. And the 1 minute, well, the 1 minute's over the 200, so that could be pushing. Okay, Stokes have found a bottom. Oops. Stokes group have found a bottom and have turned around, coming out of there, out of the oversold territory. So yeah, the 1 minute's pushing upwards. If the 1 minute can keep pushing upwards, this could come right back up. We need to see it break over 108.7. That's our 108.7, maybe 108.5. If it can get over 108.5, then we got a chance. If it can't, then hey, we're going lower. So yeah, 5 minute looks like it's going lower. 108.5 is that 5 minute 200. Look at that. So yeah, we got to get over that 5-minute 200. If we can't do that, then the 182 has no chance of getting over it, and that probably heading down. We're going to invalidate this double bottom, and yeah, head further down. How much further down? Well, I already told you. We can take another peek at the 6-hour chart for my downsides, but it's going to be 102. That's where we'll find our next bounce. But then we're forming that head and shoulders. Okay, so I'm a little bit bearish still. A little more bearish than bullish. I think we're going to see a little more downside before we see more upside. Hopefully not too much. But hey, we'll take what we can get. We'll play it how we can play it. And we'll do what we have to do to make money in this market as ethically as possible. As another great YouTuber says, yeah. All right. Thank you guys so much for watching. Sorry for running a little late on this one. You guys are awesome. Much love, and I will see you tomorrow.